Assalamu alaikum. Thank you very much for signing on. Inshallah, this week we're going to be discussing our third installment, the third webinar for technical analysis, and it's going to be called Support and Resistance. Hopefully, everybody can see my screen. And if you can't, just let me know. I can see my own screen, so I think we should be good. Hopefully, the sound is good. Um, let's see here. One second. Sorry, let me just get this slide over. All right. Okay. No one else is in the waiting room. All right, inshallah, we'll get started. Bismillah ar-Rahman ar-Rahim. All right, this one is going to be labeled support and resistance, areas of supply and demand. This is probably one of the most important webinars you'll go through as far as understanding how to enter into positions, how to exit, um, to see the direction where it's going and where it can possibly stop. A lot of technical analysts will look at it and will see that there's a certain range, there's something going on, and the way they do that is by looking at support and resistances. So inshallah, that's what we're going to be doing today. The first webinar we did was candles and charts. We went over anatomy of a candlestick and how these candlesticks form charts. The second one was trends and patterns. And we took these candlesticks and put them together to see if we can identify a trend in the market, if it's bullish or bearish, and which patterns are recognizable so we can understand if there's a reversal in the market or whether, it's going to go sideways or consolidate or in a downtrend. Now what we're going to do is it's a continuation of that same patterns. As today we're going to be working on support and resistances. I don't have the slide for that. This is not financial advice, but this is not financial advice. It's just education, inshallah, so it can help you make better decisions about your own finances. So if before you get into a position, please do your own research. Don't rely on me or anybody else. What is range trading? Range trading is basically a strategy whereby a trader identifies overbought and oversold areas or support and resistances and buys at the oversold area, which is your support, and then sells at the overbought area, which is a resistance. And who controls these oversold, overbought areas? It's not you and I. Most of the time, it's, institutions. The institution buying is what controls areas of support and resistance. And I want you to look at support as an area where it's kind of like the floor. There's the floor, and then your ceiling is your resistance. And in this range, you can go back and forth. Let's say price goes back and forth in that range. So here's a quick little definition right here of what resistance zones are. Let me just turn this thing on 1 second. Missing my annotation. Sorry, 1 second. Oh, I had my tools here somewhere. Sorry. Makes it easier to. Is this good? Oh, there it is. Okay. Annotate. Sorry about that. All right. So we'll go back to our example that we were looking at earlier about support and resistances. So we're talking about resistance zones and support zones. So, and every time we talk about a resistance zone is that the price has hit a ceiling. And once it hits a ceiling, it's most likely the price will reverse or consolidate in that area. Like, for example, you'll see that this is an arbitrary chart right here where resistance zones are available in different areas. You know, you can have different areas where the resistance zones where price basically will touch that area. And then after that, it'll just either hit it, completely reverse, come back and retest, or go all the way back down to your support areas. So these areas in red right here are resistance zones where price rejects. You also have support zones. Support zones is where you want to be purchasing your stocks, where you want to be entering your positions, or where you want to be adding to your positions. Support zones are areas. They're not one single price point. I would say they're zones. So that zone can range between 50 cents or $10, depending on what the price of the stock is. If you have something that's expensive like Netflix, like $1,000, and you can have a easy like a $20 zone where you would want to make your purchases or you want to go long in your positions. So and support zones is where institutions get in as well. It's an area where it's a lot of buying that happens and it goes across, it can go as far as time frame goes, it can go across many years, go across days. And for like day traders, they can go across minutes or hours. So yeah, that's a quick example of how these support zones work. Three things to expect when we reach these support zones or resistance zones. So, and it's not always that the price will reject and come back, but I'll show you what to look for to see if price is rejecting or if price is going to continue moving up, because obviously, eventually price is going to move up. So one thing we have to be aware of that is that it could stop, right? It could stop and just go sideways, right? Price could come here in this resistance zone and just go up and down and, just stay consolidated and it's not breaking, it's not dropping. So it could reverse. That's usually what happens. When you get a price move like this, it hangs out here for a little bit, does a double top, maybe shoots up a few wicks on the candles, and then straight gets rejected and goes all the way back down to your support area. Or it could break out, just like in this situation right here, where you have enough pressure coming, enough buying pressure, and it's hit the zone several times. So now it's time for it to break above. It comes back, retest that area to make sure that it's strong. It's like you get on top of the roof and then you bang down on the roof, like, all right, this it's stable. Now we can move on. And then price creates a new zone. Now, one good thing about resistance and support is that they're always changing roles. For example, if price breaks resistance right here and then maintain recreates a support area, then that resistance actually becomes your support, right? That becomes your support. And now this is your previous support. That's what they call it. Price can easily come back in here and then come back to these support areas, but now we focus on this resistance becoming your new support. And then from then on, you have to wait for price action to see what it does. And for example, here, it created a new resistance right here, right? Sometimes you can check back in time. If this is price discovery, like in the situation of Amazon or Google, where it's never hit these prices before, then you don't know what the next resistance is going to be, right? That's what you call price discovery. Like Bitcoin was in price discovery, a few months back where it went over 100,000 and nobody knew where is it going to go, 110, 120, 104, kind of hung out in that range a little bit, right? It's still there. It's not exactly broken out of that range, but it's hanging up here, right? It came to an area where there's a lot of selling or people want to take profits or it just needs more to push forward. So sometimes when you have price discovery, but most of the time you have not everything's breaking out, not everything's all-time high. So sometimes you'll have areas where the price has been there before, right? So you'll see that, oh, well, back here in 2005, 2010, price has been to this level. So most likely the next resistance will be at this level. And you can determine that just by looking left or looking in the history of your charts. All my trades I always use support and resistance. And I'll show you exactly how to draw those lines out today or the zones of how to create these support and resistance areas so you can enter and exit with a little more confidence here. And yes, sometimes, I'll take a trade and I'll get in this area, maybe not exactly here, maybe somewhere around here. I'll ride up here and I'll quickly jump out. Maybe with 80% of my position, I'll jump out just to see the price go like this and then take off like this, right? Yeah, and I still got 20% of my position, but the good thing is that, yeah, you may have gone on a very low price here and you wish you held 80%, but at the end, none of us really know how far the market's going to go. We don't know. It could easily reverse, and you never go broke by taking your profits. So when you have a position, when I always say when we get to these major resistance areas, let's take a little bit of profit. And I curb that strategy a little bit, and I take about 50% off, depending on how big that move is, and then I wait. And if it moves up more, I'll take some more off, or I'll hold for the next resistance. So, and this may take time. This whole support and resistance areas, they may take time, depending on which time frame you're looking at. All right. All right, let's go on. Consolidation. Consolidation is something that happens a lot. It's indecision time, right? Basically, it's a range and is a price consolidation as part of the overall trend move up and down. There's two parts. There's accumulation and then there's distribution. So consolidation is at a time where where price movement may have done this right here, right? And then it'll have a nice move up and then it'll consolidate. Any sideways movements where the range is really small, where the range is really tight, is called a consolidation, right? It doesn't know which way to go. It doesn't know if it should break out and then go this way or if it should retrace and come all the way back down. So sometimes it goes sideways. Consolidation. So there's no active decision in the market of where exactly to go. So that's what consolidation usually means. There's two parts. There's accumulation and there's distribution. And accumulation basically can go hand in hand with your demand, right? Like if you look at fundamentals or if you look at economics, demand is, hang on one second, let me let somebody in. Demand is basically where institutions want to buy, traders want to buy, whales want to buy. So accumulation goes hand in hand with demand. So when you have a downtrend and now you're setting up an area where there is support, let's say support is right here, and price starts accumulating. That means there's a lot of buying going on in these areas. People are getting ready for a longer position. They know that this is going to be a huge move up, especially the longer it accumulates, the bigger the move out, the breakout. It could break out or it could break down as well. So you have to be careful of that. So it happens prior to a huge run, right? Usually a bull run. We're not going to look at the bearish today. We'll look at the bull run, right? Let's say price drops down. It's in an area where it's a discounted price. Everyone's been waiting for NVIDIA to hit $90. Finally, and let's just say NVIDIA just hit a $90. So we have a lot of buying happening here. But some people are scared. They're like, well, what if this goes a little bit lower? So that's what happens in the accumulation phase, right? Positions are entered in, right? Volume is very low because you don't have a lot of buying. You have people getting in slowly, maybe 100 shares here, 20 shares here. Obviously, institutions are buying shares in millions, and this is where smart money enters, We're supposed to be the dumb money. Let me admit a few more people. Yeah, we're called the dumb money. Well, not really, but we don't have money that can move the markets, right? We don't have money that's gonna completely change the way NVIDIA works. Oh, well, somebody bought 10 million shares. If you're buying 10 million shares, then yeah, you're definitely smart money. Sometimes we have multiple touches of the support area because they're just testing the price out. People may get in right here and say, let's see, I'll get in with 100 shares. Let's see if it actually moves up. Oh, it does move up. Okay, I'll get in with another 100 shares. Oh, it came back down. Okay, well, it's holding this area, so I'll add another 100 right before the uptrend or right before the breakout happens. And sometimes you can consider this like a short-term resistance right here. This can be your resistance, this can be your support, and price just kind of accumulates. So that's the accumulation phase. Accumulation phase usually happens after a big correction or a big downtrend, and the movement just goes sideways. Then you have the distribution phase. Now, we've had the accumulation phase down here, right? You had the accumulation phase going on down here. You had a big downtrend, and then you had the accumulation phase down here. Now, eventually, that's going to break, and then it's going to go into an uptrend. Whatever, we're not talking about, I mean, this could be months, this could be years, this could be minutes, whatever you want to look at. But the way accumulation, consolidation, distribution works, that's in every single time frame, every single day, every time the market is open, that happens. Now, once this uptrend happens, like in the sake of a lot of stocks right now are kind of like in this distribution phase. They're kind of that's why you see candlesticks, right? with a lot of wicks that are going up, right? When you see this, usually this area right here is selling. People are selling in this area. They're selling at this certain price point. You'll see huge candles like this with like small wicks. You'll see more candles with wicks, some ugly candles, but you get the picture. But when the wicks happen, they're happening in this distribution phase, right? Because people are taking profits. Maybe this price has never been reached before. Maybe this price is somewhere where institutions are like, you know what, there's a good area to find no profits, and they know a lot more than what we know. They know what happens in the dark pools and volume that's been people like whales are buying in this area. So they know what's happening. So a lot of people start selling. And that's when you see like a lot of wicks. And that area is called the distribution phase. Think about it as distributing their wealth, right? People are taking their profits in this area, but this is also known as a resistance, right? This line up here is known as resistance. This is support. So people bought down here, and now people start selling. So when you see those those um, those signals of a lot of selling that's happening, like Nvidia has a lot of selling happening right now. So there's a lot of stocks that are being sold at these new highs and stuff like that. And Nvidia had a great run, like I said, in the chat. I said Nvidia's gone up 1,000% in 24 months. It's just incredible. So when you think about buying Nvidia, I'm not saying don't buy Nvidia or buy Nvidia. I'm not saying that at all. But what I'm saying is I want you to look at the journey of what the stock has gone through, right? It's gone up 1,000%. I mean, let's just go to the charts and take a look at it real fast. And see, it's not even on my screen. That's how high it's gone up. This is the monthly chart. That means every candle is 1 month. And I apologize for all this, all my lines. I'm going to go ahead and remove them. A blank slate. That's how I like to teach. Okay. So you're looking back here. Let's say November 22. Let's just say January 23, right? January 23rd, way over here. Nvidia was whatever, $15. Okay, we're not talking about stock split, pre-stock split. Just for the sake of this chart, we'll consider this chart right here, right? And had a massive move up, right? Really good move up, right? Went right here, pulled back. Where did it pull back to? Right around that same resistance area, right? Right here. Pull back, and then it had this huge run, just straight up. It's almost vertical. So we have people buying here. We have people buying up here, right? Because they think it's just going to continue going up, and it may. If you're a long-term position holder, you're buying up here. If it dips down, you may buy over here at 120. If it dips down to 100, you may buy out here at $100. You're you're collecting, right? You're hoping that this goes up. Technically, if you start looking at these wicks right here, right? Like we have a lot of wicks that are going up, and I showed you that when the price moves up, do you see any wicks here? No, you see strong candles here, right? Very, very little wicks on top, right? Strong candle on the push up, strong candles. Usually when you have candles like that, that's a very bullish sign. When you have full candles and you have nothing, you have no selling on top, you have some buying right going on right here when the candle dips. But as you get higher, you get a longer wick right here, right? And a longer wick, longer, 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 and the longest wick right here. And this is the last month of January, right? Or yeah, this is January. A month just completed, and we have a new low, right? This month just broke last month's low, right? This is December. This is January. January just broke last month's low, and it broke in pretty harsh fashion, right? It went up, and this is called an engulfing candle. That means it kind of engulfed the previous candle. So when you have something like that, where you have this candle's high and this candle's low has been taken over by the next candle, and it dropped down, to me, it's a sign of correction. It is definitely a sign of correction. Yeah, we have a level around here somewhere, around 110-ish that it looks like price has bounced around. We also have a level way down here around 80, 90. And I mean, I'm not saying that price will get there, but technically, if this area breaks like this, let's see, if this area breaks, then yeah, we can have a price movement down here. But what I'm trying to say is that up here in this zone, and I'll zoom in, is distribution. People are taking their profits. People are taking their profits up here. This may have been accumulation. This little small area right here, people are accumulating because it came from a move up and a move down, right? Now people are accumulating. Let's see what happens. Let's see what happens, and boom, you have a nice movement up, right? So
So let's take a look at a closer time frame for NVIDIA. This is the same time, this is the same area, except this is a weekly chart. On the weekly chart, you have a lot of ups and downs, ups and downs. I mean, you can call it double tops if you want, you know. We had this recent top right here. This came up here, came down. I mean, came back up here. These two can be double tops right here if you want. You can call those double tops. So it hit a high, whatever, 150, 155. Got up here, double topped, and it's if you want to call this the neckline, now it's breaking below the neckline. Like this gap down was huge on that DeepSync news from China. I mean, it was huge. But see, technical analysts know that the catalyst is just an excuse for the stock to drop because everybody needs a reason. Why did Nvidia drop? You cannot have no answers. The government cannot have any answers. You know, you have to have an answer of why a stock dropped. 2008 financial crisis, Lehman Brothers. You know, those are the names that come to mind when you say why did it drop? Well, it was a Lehman Brothers. 2000, why did the stock just tumble? What was the dot-com bubble, right? Well, why did we had a crash last week? Well, DeepSync, China. I mean, honestly, I don't get it. DeepSync sounds cool and all that, but we're at a top here, guys. It's not like it's going up here and suddenly it drops down in this area. Why didn't it drop here? No, it dropped at a very specific area. Once NVIDIA is done moving up 1,000% in 2 years, now it's dropping. Well, that's expected by technical traders. And now that you're armed with technical knowledge, you'll know that, okay, you know what? I want to wait for the price to correct just a little bit. I don't want to buy at the tops. You don't want to buy Bitcoin at 20,000 back in 2018 like I did, and then write it all the way down to 3,000. I had no idea. I had zero idea what these charts were. So therefore, a lot of people are buying up here, 150s, NVIDIA, 147, 145, you know what I mean? Hoping that we go up to 250, 300. Inshallah, in the ideal world, one day we will get to NVIDIA 300, but not without its corrections, right? And, now going back to support and resistances, if we look at the support and resistance of this chart right here, right, we'll see that. Let's go back here. Let's go to an area where we can actually we'll deal with NVIDIA today, and then we'll call support and resistance, and I'll go back to my old chart as well. But NVIDIA made a move up right here in June, right? And then it stopped moving. And then price came back and tested a few areas right here. So we'll just draw out a line right here. So let's say around $39, $40, right? Where price created, NVIDIA created a support. Now, it's not going to be an exact line. I would say it's more of a zone. So let me draw this zone out. So we can say we'll take the bottom of this candle right here, and we'll take the top wick of this area right here, and we'll say that's the zone. So this is, you can even call this your demand zone, or this can be your support area. Let's just use support and resistance. So this is your support area. Why is it a support area? Because it has more than one touch on a larger time frame, right? You have a touch right here, and you have a touch right here. That's a support. I came back here and kind of touched it, and then you have a touch right here. So if it has multiple touches, especially one touch, two touch, three, four touch, you know that this zone right here is holding, right? It hasn't broken below. If it wanted to, it would have broken below like this and then went all the way back down to this area, right? It didn't do that. It's holding this area. So what happens here? People start accumulating shares because, okay, well, technical traders are like, wait, this area is holding. So therefore, I can enter my positions in these areas right here, right? Right? You can enter here. Let me use a different candle right here. You can make entries right here in these areas and say, if the stock breaks below, let's say I'm getting in at, what is that, around $40. If the stock breaks below, say 35-ish, I'll jump out. I'll jump out. I'll keep this as my risk because obviously if the stock goes below this, it's going to continue to drop. You know, there's the next support area is like way down here. I see right around here. So talking about around $20. So we want to manage our risk, right? So if you made entries here, yeah, I understand. But how do we know it's going to go up, right? That's the biggest question that people ask. You don't know that it's going to go up, right? Because here you see you have a little bit of a resistance as well, right? Where price comes here, touches in this area. Now let's draw a zone out, right? We'll draw a zone out of how this actually is. So I would say the zone is like that. This is your resistance zone. That means price has come here, hit once, right? Price came and hit right here, twice, three times in that zone again, four, but that doesn't really go all the way back down, right? fifth time, right? And then rejects back down, and then we have the breakout right here, right? So this can be your resistance zone, and this right here is your support zone. And this just happened recently in June of last year for NVIDIA. Or is that 2023? Yeah, that's 2023. This happened in 2023. But you have this zone right here. So a lot of people are accumulating in this area. So if you want to buy, you buy at the bottom of that zone. You don't want to buy at the tops of these zones because then you'll still have a correction. I mean, you may still get the breakout and it'll take off. But if you want to accumulate, you accumulate at the bottom of the zone. Now, let's go to today in NVIDIA. Like, what type of zones are we creating now for support and resistances, right? So price stopped moving in this area, right? I would say right around here, price kind of went this way and stopped. So right around the $90, $95 mark, you have price stopped, and then price retested that area. So what we'll do is we'll go ahead and draw out a zone. Usually, zones are created by squares. So I usually just draw it like a square like this. So, and we'll even consider this point right here, right? This point. So we'll go all the way up to like $102, all the way down to around $85, $90, all right? So now prices keeps touching this area, right? Well, it's touched it twice now, right? It's gone up here, and I will even draw a resistance area out as well, right? A resistance zone. You can see resistance starts from right here, a wider zone. You want to cover everything. You want to cover the wicks as well because the price has the ability to go all the way up to there. So now we have a clean area of price that's moving in between these zones, right? You got price that went up here, rejected, came back up here. Had a little movement right here, came back up here. Now, what do you think is going to happen here? Most likely, it's going to get rejected. And the sign is very apparent. It came down here, came back up here. Now, I know you guys know what that is, right? One top, two top. It's a double top, right? Came back down here. And if you say, even if you say this is the neckline, we do have a break below the neckline. As much as you want to argue, no, Sarfraz, I know NVIDIA is going to go up. I know it. I just know it. Inshallah, I really hope it does. But at this moment, right now, we're breaking below the neckline. For me, that's a bearish sign. I was okay around this area. I'm like, you know what? It's still in the resistance zone. It's not going to drop. But then this gap down, this is a gap down, right? A whole gap formed right here. That's a gap. It gapped down. So it means pre-market, aftermarket, the price moved sharply down, right? So now you have price that's closed below the neckline. The monthly, this is a weekly chart, sorry, that's closed below. That means it's only logical to say that price will retest this area, right? It'll retest this area right here. It may even retest this area, right? And then it may accumulate, right? Accumulate. And I don't know what's going to happen next. Yeah, in an ideal world, we'd love price to come back up here, break this, and then take off the races. Or the bearish scenario would be to go lower to probably get to this area right here, around 75, break below 75, retest, and then drop down. I don't know. I'm not sure what's going to happen. There's a lot of economic chaos happening with tariffs, and then Canada throwing tariffs back, and Mexico has tariffs, and China has tariffs. Everybody has tariffs. So I don't know. And these are companies that make it in China. So I'm not sure what's going to happen. But what we do know is we don't need to worry about that. I don't worry about it as much. I listen to news, great, DeepSeek, all right, amazing. But I already knew this was going to happen. I just didn't know how badly it was going to reject. I didn't know. But I knew there was going to be some correction because these zones are drawn out on my own charts in Thinkorswim and other places. So we kind of know that this area is a selling area. It's not a buying area, right? Your buying areas are down here. Or no, we can you say, well, Sarfraz, I don't think NVIDIA is going to come down here. Can I buy at a closer level? You can. And then we'll dig deeper. What we have to do is we have to go to lower. We have to go to lower charts. We're on the weekly charts. We got to go to daily charts. I know daily charts look scary because a lot of red going on over here. Of course, you're going to see a lot of red. This is a distribution zone. It's a supply. It's a distribution zone, and it's a supply zone. It's where people are selling, right? So when you go here, it's like, well, we can draw multiple support and resistances out right here, right? So up here, we have a resistance zone up here, right? We also have another resistance zone in this area right here because we see something being created right here, right? So if you see, let me draw a few lines and then I'll go through with it. All right. Let's see. Okay, we'll just stick with this, right? So price came all the way up here, right? Rejected, came all the way back down here, came up here, and it kind of formed new resistance because we have two touches right here, right? Resistance one, resistance two. Like I said, these zones move around, right? And then it went up here, came back in here. Came up here and created another new resistance right here, right? So a lot of people, I honestly thought that price would come back to this area, like around 130, and pause right there. And then, because look how many touches 130 has. One, two, almost, three, almost, four, five touches. So that's a new support area. True, this is the key support area, right? There's a big support area right here. But in between here, it went over here, this resistance became support when this happened. When this move came back up, retested, and went up, right? So this became the new support area. So now price stayed in the support area. But what happens? The price stays above the support area. Like let's say price came back here and bounced right here. Great area to buy. Like, well, I can write this back up here and hopefully we tag and go. But price did not. Now price has broken the resistance, I'm sorry, the support area, right? It's broken below the support, right? And it's right here. There's only one logical place for this thing to go. It's down, right? But then we say, like, are there any areas where it could potentially stop? Maybe there's a very small support area right here, not much. Maybe this area. But if you come all the way down to this area, you might as well buy in this area, right? Around 95 to $100. So that's how you determine support and resistance, and that's how you can make smarter purchases, not up here, smarter entries, coming back to areas where price is actually going to reaccumulate again, right? So let's go back to our definitions. So NVIDIA accumulation phase, and now it looks like it's kind of dipping down, I don't control the charts, so don't shoot the messenger. All right, so here's the bigger picture of how these phases work, right? You have your accumulation phase. It's usually, there's a few key points that it gives right here. A range after a 6-month decline, long period of consolidation, the 200 MA filtering. Don't worry about this. I'll teach you about 200 MA later. It's called the 200 moving average. Advancing means it's actually in that bull trend. It's finally breaking out from the accumulation, right? We're moving up. And now just distribution. Now people are taking profits. And now the decline, right? So this area, it says a distribution area, which I think we're kind of leaving this distribution area right now for NVIDIA. It's a range after a 6-month advance. It's possibly, you guys can do your research right here, long period of consolidation. It's been consolidation for a while, right? Right? I would say about October, November. 200 MA, I'll teach you about this. And now the decline, right? Where traders become long-term investors. Price below 200, I guess they're talking about people who will start buying in this area down here for the move up. You can be a long-term investor and be short on the stock. And I don't short, so it doesn't really matter. But yeah, those are the four market phases. Now, like I said, we can have moving averages. Now, if you wanted to draw out this chart, let's say this NVIDIA, you can draw moving averages. I'm sorry, support and resistance lines by just dragging lines across. Now, I'll show you how to do that in TradingView later on, how to do it in actual TradingView if you guys are using that. But every charting tool should have like a line chart, like a line that goes across. But if I were to chart this one, I would start off with the top, right? Would go right here. Then I'll start off with this other wick high, right? There's a big candle that just popped up in this empty zone over here, but I'll definitely consider that as a line that goes across, right? And we have multiple touches in this area. So I'll draw a line out right there. I'll draw a line out right here, right? Definitely draw a line out right here, right? And then we'll draw a line out right here, right? And then, we'll just say, hey, look, this potential area where price can bounce, right? So we have this, right? But this is support and resistances. Every single line can be a support or resistance, depending on where the price action is. But this is not the only way you can draw out trends. You can also draw out trends by going diagonal, right? There's diagonal trends as well, right? Because we see that, if we go out in a higher time frame, let's go ahead and delete this. Let's go weekly chart. I can show you diagonal resistances as well, resistance support. So if we're going out this way, you can see that we have a lower high, I mean, a higher low, higher low, higher low, higher low, higher low. This was a higher low, but now we have a lower high, lower low, right? Oh, that's another thing you guys should know by now, right? You guys know higher highs and higher lows, right? You have higher low, higher low, higher high, higher high, higher low, right? Higher high, higher low. That was it. This was the last higher high, and this was a last higher low. That means that was the uptrend, right? So the uptrend's moving out like this. Now that's kind of accurate, right? You have a touch right here, you have a touch right here, touch right here, touch, touch, and touch, and touch. That's it. Now we have a change of character, or I'm sorry, a break of structure. This is your structure, right? Let's say this is the structure that's moving up, right? You got price bouncing, 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 right? These are also known as support and resistance. You have your resistance up here because price is rejecting in these areas, and you have support right here. You see how this price, every time it comes back and hits this, every time it comes back and hits this, and people buy off that as well, right? Because sometimes this intersects with your support and resistances, where if you have a resistance or a support, it's coming back, and you have a diagonal line moving up, it's a great area to like get in, right? Good time to buy in these areas right here. And at the top, you have areas where it rejects, and you can create what they call a channel. This is called a parallel channel, where each line is parallel. Now, I may not have drawn it as accurate, but I'll show you in TradingView. That each of these lines are parallel, and that's where price moves up. It may not exactly hit the top area, but we know that when it's an uptrend, you definitely want to focus on that bottom support line, right? This is also called diagonal support because price keeps hitting this diagonal line and moving up, right? And we were hoping for the same right here, that it would come right here and it would take out the highs, and then it would just move up like this, right? But that didn't happen. Now we have a break of structure. That means now we officially have a lower low, because this was your last low. We have a lower low. The most likely price is going to come back up here, right? And then drop down again like this. So you have a lower high, high, lower high. And then if we make another low, if we go lower than this, then we're in a slight correction, right? In a slight correction where price starts moving, lower high, lower low, lower high, lower low. And this doesn't have to be dramatic and move all the way down here, but it'll move to a point where there is major support, let's say $90 area, come here, consolidate, and then have a move back up, right? But right now we are seeing lower highs. So that in itself, I don't have to tell you this. This is webinar number 2, or webinar number 1, lower highs, right? Lower highs indicating of a correction or a bearish movement down, right? So you can have lines that go diagonal as well. You have diagonal support and resistances as well. And you draw out those lines in any type of trading tool. Okay. So now we have moving averages. I'll go ahead and enable that right now on my chart. And I'll show you what moving averages look like. And then you'll be surprised. All right. I'm going to change the color of it. So this is a little more. So this one, make bright blue. Oh, that's fine. I just need to make it thicker. That's what I'll do. There you go. Now you guys can see it clearly. All right. So I'll leave this up here for a quick second just to show you what these moving averages are. And different people use different type of moving average. A moving average is basically the price over a few days, right? That's all it is. It's just what's the average price over the last, let's say, 9 days, right? Now, this the red one, you see this red moving average, this line that's kind of like curving and just writing price all the way over here. That's a moving average. And this one I set up as a 9-day moving average, right? 9-day. That means this is the average price of 9 days, right? Or 2 weeks, let's say. Over 9-day period, that is the average price, right? It's not up here, it's down here. And the blue one is called the 21 moving average. Some people use 20, some people use 50, some people use 10 over here. It honestly doesn't matter as long as you have one moving average that you always follow across all charts, right? This is a 21 moving average, right? This doesn't react as quickly. It's a little bit longer term moving average. What's going on over a month of trading, right? Because you have around 22 trading days in a month, not including weekends and some holidays, about 20 to 22. So this will give you your average price that the stock should be at over a 22-day period or over a one month period. As you can see, price right here hits this blue line, right? And then takes off, and then comes back to the blue line, right? Takes off, come back here, breaks below the blue line, goes back up, but still comes back to the blue line, goes back up, back to the blue line, right? Now, as long as price stays above the moving averages, right? It's above it, right? Price is above it, comes back here. Price is above it, comes back here. Above. We have none of these closing below. Closing below means the this. This is closing below, right? So the moving average is up here, right? The moving average is right here. These moving averages are now curving, right? And sometimes you have what's called a moving average cross. A moving average cross means is when this moving average, let me just do it in a different color, you'll see. Well, actually, I'll just show you. I don't need to do it in a different color. Moving average crosses happen all the time. Let's go to a lower chart. This is a daily chart, right? Now, if you look at the daily chart, moving averages, okay, there you go. So here's an example of what happens when the moving averages cross, right? You have your red. Now, if the red, again, you can do whatever color you want, right? This is your red, this is your 9 moving average, this is your 21 moving average, right? Now, in this area right here, you see that they cross, right? The 9 goes below and the 21 goes above, right? When that happens, price is going to go below. It's a correction. It's a small correction or a pullback, whatever you want to call it. In this case, it was just a pullback, right? So let's move forward here. Now here, you see price correcting here. This is where price had that huge gap down after that DeepSync China news right here, right? So the moving averages are crossing right here, as you can tell, right? The 9 is below the 21 now, right? And usually it starts going like this, right? The further they get away, that means the price action is going further from these moving averages. So a lot of people, I taught this strategy a while back, but a lot of people use that moving average cross as a way to get in and get out. For example, let's go back here to NVIDIA back in 2021, right? And had that correction. Obviously, COVID and everything else was going on. Now, if we zoom in, I'm going to try to make these moving averages a little bit more thicker. That way you guys can see. Let me see. Oh, yeah, there it is. Make it thicker. There we go. Now you guys can see it clearly, right? Okay. So as you can see in this area, price is touching the moving average is 21. It's riding the 9 moving average, comes back, touches the 21, goes back up here. And here you'll see that finally it goes below both the moving averages, right? It goes below, sorry, 1 second, admitting somebody in. So it goes below the 9 moving average and it goes below the 21 moving average, right? Price is below. And then what happens? Then you have a little crossover right here, right? Right? Where the red line is now below the blue line. The 9 moving average is now below the 21 moving average. And where do you see price? Now, price is also below. Price is actually dropping, right? It's dropping. It's going down. So you see how price drops, and now it starts respecting the 9 and 21 as resistance, right? This is a diagonal resistance. I talked about diagonal resistance. I talked about straight, vertical and, horizontal resistances, but this is a diagonal resistance. This moving average is a little more fluid, kind of flows with price a little bit, but it still creates resistance points right here, right here, right here. It comes to the 21, gets rejected, goes right back down, right? So that's also support and resistance. So you can view these as support. As you can see, look, this is all support, right? It's supporting the price. Every time the price comes back here, it bounces and goes up. So a lot of people use that as a strategy. Some people use the strategy of a crossover, right? So price has crossed over here. Moving averages have crossed, and they're going down. But in this area, something happens, right? It creates kind of like this. This is called a head and shoulders, inverse head and shoulders. I haven't gone over that pattern yet, but basically it comes down here, and then it makes a lower low, makes a higher low, and then it breaks, right? It breaks right here, but at the same time, you also have a clear crossover right here, right? You have a crossover right at this candle. So an entry can be made on crossovers, right? And this is on the weekly chart. So obviously, this is to hold for a few months, right? Usually, if you go on a daily chart, you would hold for a few days. But if you're getting crossovers of the moving averages on a weekly chart, you won't, at least for a few months, right? This is all week, week, week. Everything is 1 week. So you see this last crossover that happened right here, right? So it did sell off from mid-March all the way down to um, December of 2023, right? So this was 2022. This is 2023 right here. 2023, it began its 1000% bull run, right? So on this crossover, if you bought on this crossover because you see these moving averages are being crossed right here, that's a strategy in itself. You can buy every time it crosses over. You, you buy over here because it crossed over, and then you sell over here when it crosses over. It's a very simple strategy. And I know a lot of people that do it because it just simplifies everything. It may not be as accurate. You may not get the exact bottom. You may not get the exact top, which nobody really does. But that's a strategy in itself. So let's see how this strategy plays out, right? So let's say we get in right here. Go to zoom out a little bit. All right. If you got in, okay, this chart is too high up. Video moved way too much. All right. Okay. So, okay, we'll just say, yeah, right around here, right? Okay. So you got in, the crossover happened down here around the $15.80 mark. Obviously, the NVIDIA was a different price due to the, share consolidation. And so let's see. So you got in this area right here, say $15, $20 for NVIDIA. You already know what the price is at. That was the last crossover on the weekly chart, at the current chart, right? Without any like stock splits or anything like that. If we look at this chart right here, this is the last crossover that went bullish, right? The bullish crossover happened here for the 9 and 21 moving averages. And then the 9 and 21 played as support for the price right here, right? Price bounced. Went up right here, price bounced. Came back right here, it acted as support again, price bounced. Yeah, here it dipped a little bit below, but the moving averages did not cross, right? The moving averages did not cross. They came right here and they went up, right? The moving averages did not cross. They came close right here in this area. Yeah, true, price closed a little bit below the moving averages, but it still held a support and the moving averages never crossed. That means you had a shot at the highs. Now you reach the highs. Now we see the moving averages curling, and we still don't know. You could still technically be in this position right here and say, hey, well, until the moving averages cross over, which may be somewhere around here, I'm going to stay in the position, right? So again, we have support, and now moving averages may act as resistance, right? We're not sure, but that's the way we can use moving averages as support and resistances as well. So a lot of people do that, and you can tell. And this golden line right here is called the 200-day moving average. The 200-day moving averages is kind of like a staple in technical analysis community. Everybody uses a 200-day moving average, that when the daily chart hits the 200-day moving average, it always bounces. That's what they say. And where's NVIDIA at right now? It's at the 200-day moving average, right? So not all hope is lost. My long-term investors in NVIDIA, not all hope is lost, because so far you see that price has respected the 200-day moving average. I don't know when the last time price was below it. Oh, there it is. So yeah, in that last COVID run down, that's when price was below the 200-day moving average. Now we're looking at the daily chart here, right? The 200-day moving averages usually is used in the daily chart, but you can use it on higher time frames as well, which means it gives it more confirmation that, hey, if it goes below, we are definitely going down. But right now, since 2023, it's never even touched the 200-day moving average. That's what you call a bull run, right? With NVIDIA, came close, came close. But now we're resting on the 200-day moving average. Literally, we're resting. We're testing it over and over and over again, right? So we have a little bit of buying pressure happening right here, right? People are coming here. No, we got to make sure it closes above, right? This candle closed below. The rest, 1, 2, 3, 4 days have closed above. We really need to hold this area. If we cannot, 120, then we're going to break below. And every time a stock is below the 200-day moving average, it's not bullish. You never want to enter a position in a stock that's below the 200-day moving average. And this is textbook. This is a textbook rule that, excuse me. You always want to enter above, because if a stock is below the 200-day moving average, we're moving south. We're moving lower, right? For over the 200 days, it's been above, and now it's below. You don't want to get in. You want to wait for the stock to be above the 200-day moving averages. If you want to add to your positions, if you want to have a bullish outlook on it, that's what you want. But yeah, that's where we're at. So there's a key area. There's a very important week coming up next week. We're going to see how NVIDIA's price reacts in this area. So, all right, moving on. So that's moving averages, right? Let's see. Again, we just went over this example of how moving averages, use this as resistance, right? They keep hitting this and keep rejecting. We also went over the examples of how moving averages have being used as support, right? Kind of looks like NVIDIA a little bit. All right. Now, let's talk about these supply zones, and how would you actually enter into a trade, right? I mean, that's what you guys are here for. So when you have these supply and demand zones, right, you have a little bit of consolidation in the middle, right? And you want to try to get an entry as soon as we get out of that zone. Well, let's just focus on this chart because most of us are long traders, right? That as soon as we get out of this, either your entry is going to be right here or the retest. Any strong stock will always retest some way, or you enter right here, and then you can write it up, right? So I'll show you live examples. Again, another quick graphic right here, just to show you guys that these are your supply zones, these are your demand zones. Now, the thing is, the difference between supply zone and demand zones and support and resistance is that supply and demand zones are constantly changing, right? They're constantly changing. You can have, let me show you some supply demand zone. For example, you have a demand zone right here, right? Now you had a demand zone right here, right? You have a supply zone up here. Now you have a supply zone up here. They're different than support and resistance. It's true. They can play hand in hand with support and resistances, but usually your last demand zone is not going to be your next demand zone. They constantly are changing because the price is evolving. So institutions are going to say, well, we obviously don't want to get in up here. We want to get in down here. If possible, we want to get in down here, or we want to get in way down here, right? In this area, right? This is kind of like the discount zone. This is a huge discount zone for NVIDIA, way down here. So it looks like price is trying to gravitate towards that area where institutions can come in heavy in this area and then write it up for a nice $52 per share move or more, right? So where would your entry be, right? You'd want to ideally enter in a demand zone or in a support area, right? Here's another slide right here, but I'm sure you guys have already got it. Okay, so how do we enter these things? And that's when we have something called a breakout and retest. And the breakout and retest is my bread and butter for trading. This is what I use all the time. This is the only thing I use. I don't use anything else for my strategy or what they call a trader's edge. This is what I use, a breakout and retest. And usually it's breaking a resistance level, coming back and retesting it, and then bouncing and moving up from that. That's what you want. That's where your ideal entry is going to be, right? You have a nice move up, and some people say, well, I want to catch this move. It doesn't happen. It doesn't work that way. Once you have this nice consolidation going on right here, and this can be on any chart. You can go monthly chart, weekly, daily, 1 hour, 5 minute, 1 minute chart, which I use sometimes to really snipe my entries to make sure that I'm very accurate when I get in. So sometimes I'll know that there's a resistance level, so I'll put some limit orders in right here. I'll say, okay, look, I want to buy 300 shares if it breaks this price. So sometimes I'll get in right here. And if it retests, then I want to buy another 100 shares to confirm my position as long as it holds. And I'll have risk management. I'll say, you know what? If it goes below this price, then I'm out. I may add right here. Or if it goes below it like this, then I'm out. So usually my entries will be with limit orders on breakout levels, right? If I have a level that's constantly being tested, a resistance and support level, that's good for me because I like that. I'm like, okay, this is where I have some time to kind of plan out my trade, get in right here, and then ride the breakout all the way up and take my profits. I'll show you a real life example with that. Obviously, that's the best way to do it. So here's another example right here, where prices constantly hitting this area. It's not going to be hit it exactly. It's you're going to have some candles up here. You're going to have some candles up here coming down, if it cancels like this, but eventually it'll break it. And sometimes the retest will be very small, very small. It'll just be like one candle and the next candle touch it and it's gone for the races, right? So this is your ideal area to enter is when it breaks over this resistance area, retests it. That's where you want to get in and ride it up. And obviously you can add on these higher lows, right? So let's go for some real life examples, inshallah. All right, let's see. Go to the weekly chart. Actually, let's go daily chart. Daily chart's a little bit easier. All right. See, this is a really good example right here. So let's say price has moved up here, and now it's forming the zigzag pattern right here, accumulation, right? It's hanging out over here, right? So we can start drawing out our first high that happened, then it rejected. So we have this resistance level right here. And we also have a support down here, but the more key support is right here when it has multiple touches, right? So this area has multiple touches. So if you're someone that's waiting for NVIDIA to kind of hold this area, we have one touch, two touch, three touch, four touches. True. You say, Sarfraz, why don't we get in right here? You can get in right there. That's not a problem. I just don't know which direction. At this point in time, November 2022 or 2023, I'm not sure which direction it's going in. I know it had a nice move up, right? It went up like 300%, but I'm not sure what's going on here. I'm not sure which direction it's going to go, right? So yeah, you can still enter here and set your risk management profile right here. So if it goes below this, you can jump out. That's also a decent strategy. There's nothing wrong with that. And I've played that strategy multiple times. But if you really want to break out, right? If you really want to get in and be confident, because this can fail. This can come right here and then fail. I'm not sure. Obviously, hindsight is 2020. Now we can see the past. Everyone's an amazing trader. But you'll see it comes up here, consolidates, and I'm waiting for this break. Now it gets really tight up here, right? Right? It switches. The support switches. The support is no longer down here. The support is up here. It's getting really tight. And now we have this crazy breakout. Now, in this case, it did not pull back. It did not pull back, right? Usually it'll pull back, retest, and take off. This one did not pull back and retest. Some of them don't. I can't tell you, well, it has to follow that pattern, Sarfraz. No, it does not have to follow any pattern, actually. So that's why I usually make my entries at the break. And if it comes back and retest, I will get back in right there, right? I will re-add to my position. In this case, it broke this $50 level and it never looked back. It took off. And the next time to look back was way over here, right? Excuse me. Way over here. 50. Next move up from $50 was broke this level. Yeah, the next peak was $96. It almost doubled in price from that break, right? But usually you'll have a nice break and retest, and then you can get back in the position. So let's see. Let's go to Tesla. So that's always fun. All right. A weekly chart on Tesla. Now, Tesla's also has been in an accumulation, I would say, up here in this area right here. I mean, even though its highs are, it had some highs over here, but also had another high back here in December 2024. But Tesla has been kind of holding. But if you look at the monthly chart for Tesla, right, you have to know that there's a previous high way up here, right? Around 405, whatever, $400, right? We had a previous high. We broke that high. Now we have a high of 480-ish, 500, let's say. Now, usually what happens is it'll break it. It'll come back here, retest this area. Now, this is a zone. Remember, these are a resistance zone. So if you look at the monthly chart, it's going to be a much wider zone, right? The zone is going to be like this, right? Where the zone may be almost $50, right? So you have a zone for Tesla right here where it's hit this price, come back up here. Now it's touching this price again. Yeah, it did break out, but the monthly candle didn't close, right? This was, I believe, November. This is December. This is January right here. Now the February candle is going to start forming right here. We don't know which direction that's going to go in, but we know that we have a high around 400. Let's say 400 for this number's sake. And now we've broken above it. Price has gone above it, but it hasn't closed above it. That means the candle hasn't closed like this above it, so it can, continue to move up, right? It has not done that yet. Waiting for it to do that. But price is just hanging out in this zone right here. This is a resistance zone. So you have a lot of profit, right? A lot of people are taking profits here because people got in over here, people got in over here, people got in at the break of this, right? People got in the break of that. They had a nice move up. You're talking about 200. They've doubled their money, so obviously people are going to take profits. Now, if you look at a closer time frame, we can find out exactly what's going on. Let's go to the weekly chart, right? Now, if you take the same zone and draw it across again, same supply, resistance zone, right? Can be a little more accurate, right? We can go right here, right? So we have price hitting these areas. So now price has come back in that zone. It hasn't broken below the zone, right? Yet, right? Tesla hasn't broken below this zone. Let me choose a different color. So we have kind of like this area right here where price has not broken below that area, right? It's coming here, consolidating, going back and forth, kind of like in a small channel like this a little bit. So I'm hoping that price comes back here, retest this area around 370-ish, 360-ish, and then either do this, come back up here, retest, and then take off, and then break this high right here of 480 and head to 500, right? So that's what I'm hoping Tesla will do, right? But I'm not sure yet. I have to wait and see. But I am in a long position. I got in a lot earlier, so waiting for this position to play out. But usually what happens in this area is it's retesting and trying to push back up. That's what I see right now, right? It's kind of retesting this area right here, right? This where it broke. You have a breakout, right? Retest, and then hopefully a push up, right? But we have some price levels that we need to be worried about, right? This price level. So it needs to get back above this previous all-time high from, what is that? October, November 2022. That's the previous all-time high. So that's a super high, right? That it got there. It needs to reestablish price above it. Once it reestablishes price above it, then you'll see a lot of interested people right here in this area. So around 420, 415, 420 to shoot back up to break this $500 level. And then that's kind of like a psychological level as well. Sometimes they have these psychological levels like 500, 100, 1,000. And as soon as price hits that level, it rejects hard, especially right here. You'll see price hit that level. Let me see. So was that actually that level? Almost. It was almost that level. It was like 496, 494, 493-ish. It kind of hit that level and rejected because getting very close to 500, right? So Tesla is currently doing a retest of this level right here. So if I draw out a line again, whatever this level is, we can just take it from right here. It's retesting that area. So if it can hold this area right here, then it can bounce and then take off, right? Now, I'll show you an area. I'll show you an example of intraday trading for a breakout and retest strategy right here. Let me go in deeper into the 1 hour, 4 hour charts to see if that's possible. Let's see. Go to 1 hour. It's going to get a little bit weird, but don't panic. We're just intraday. We're going to the 15-minute chart. So 15-minute chart basically means that, every candle is 15 minutes, right? Let me find you guys an example. All right. Here's a pretty good example right here. So, all right. We're just going to focus on this day right here, Friday, January 25th, where now you see price has been holding this little small area right here, right? So you got price that was kind of coming down here, touching these areas right here, right? It created kind of like a formation right here of a high. Now, on that day, on that Friday, the 25th, you had a breakout of this level. Like now, when you look in intraday, you're not going to go too far back. You're going to go a few days back and see what areas have been touched, right? So you have this area, you have this area, right? You have another area right here that's being touched, right? So price will respect these areas really, really well, right? So on that day, we had a break of this area right here, right? For the past day or so, broke this area, came back and retested it, And that's usually where my entry happens. And look, it's also using the moving averages, right? You have a moving average cross right here. So let's just put everything in one. We have a moving average cross of the 9 and 21, right? Crossed over here. You have higher lows, right? Moving up, higher highs right here. We finally have a break of structure because this was the last high from yesterday, broke that, came back, retested both the moving averages, right? The 21 especially. You have this long hammer candle right here, another small hammer candle, and a strong move up. So your entry would be in this area right here, that retest of this price zone, retest of the moving average. And once you enter right here, even though it still breaks this area and retest again on this little candle. See, let me zoom in into this area so I can show you. There we go. All right. So what price did right here is intraday trading. There's a 15-minute chart, was break this area right here, right? It broke right here, hard candle move up, right? Nice, big, solid green candle. And then pulls back, right? Kind of like a zigzag pattern pulling back. And as soon as price hit right here, look what happened. Look at this candle right here. That's a hammer candle. A lot of buying action went right back up. Price dipped in here again, a lot of buying action. Price went right back up. Your entry could be anywhere in this area right here, anywhere in this zone, right? And that's usually where my entries come in. I enter in this area right here, and usually my stop loss is somewhere down here, right? We enter, it's holding the moving averages as support, and it breaks out. But not only does it break out, it comes back and it retests that area again, right? This was your previous high of that day. For that day, it's called a high of day, right? HOD. High of day right here is here. It breaks above the high of day, comes back and retests that same high of day, and then takes off again. So yeah, your entry could be right here because I'm waiting for this break and retest, but your entry could be also right here because let's say you didn't get this entry, but you're waiting for this break and retest. So you can come back here, break, retest, enter in this area right here. Your stop loss will be down here, and then you take off to the races. So this is a strategy that I use over and over and over again, almost every single day. This is the only strategy that I use. I use a break of structure or a break of resistance, retest that resistance, and then move on up. So I just want to show you that this is this can happen on any and every single time frame. It's 8:11, running a little bit behind, a little bit over, I guess. So let me see what other charts are left. Yeah, I have more basically more just examples of break and retest, and I can cover this next time. But I'm going to go to questions. So if you guys have any questions at all, you can just unmute and ask questions or raise your hand, and I'll just go ahead and get you, inshallah. But yeah, please let me know if you guys have questions.
Can you talk about the breakout and retest strategy on determining when to get out?
Yeah, you would get out at the next resistance, sure. So do you have a specific example in mind or specific stock in mind, or?
No.
Okay, sure. 1 second. Where did Tesla decide?
Let's take NVIDIA an example.
NVIDIA?
Mhm.
I know, you love NVIDIA, I know that. All right, let's use NVIDIA as an example, inshallah. Okay. Reset price scale. Okay. All right. So it depends on where the price has already been, right? So if you're looking at a breakout and retest strategy, and let's say we're in this area, you obviously don't know that the price has moved up in this area, right? So you have price consolidating right here, right? This price is consolidating and you're looking for a break of this, right? Price has been going back and forth. And remember, this is the weekly chart, right? That means every one of these candles is a week, right? So finally, you get in right here because you see the break that happened. It goes up and it comes back and retests this area perfectly. Then you have a wick again because there's a lot of buying pressure, and you have your moving average, right? You have a lot of what we call confluence. Confluence basically means you have different factors or different indicators that are supporting your bias of a long trade, right? You have a breakout and retest, which is number one, right? It's holding above the moving averages. So it's holding above the 9 and the 21 EMA. And you have a bounce on the 21 EMA, right? You have a wick forming, you have a hammer candle. So you have a lot of confluences that are happening here. So this would be a very high-end trade. I mean, and then your stop loss is somewhere down here. You enter in this area, right? Let me use a different color. So you enter right here, right? And then we obviously want to make sure that the price breaks this, right? At least that. So once you break this, we don't know where price is going to stop, right? But the way you notice that price is going to stop, and this, it depends. If you're talking about a scalper, a person who scalps, which goes by seconds and minutes, he'll get out, he'll start taking profits in this area, he'll start taking profits in this area, start taking profits in this area, if this was a minute chart, right? If you're looking at someone who's a swing trader, right, then he may have price targets that are much higher. Usually what they do is they call it a 2-to-1 trade. A 2-to-1 trade means the amount of risk, right? You should double your profits for the amount of risk versus reward, right? So let me draw that out. So let's say this is your risk. You're getting in right here. This is your entry right here, right? And you're saying that, well, you know what? I'm going to risk $10 per share. So that means if it goes below this, I'm out. But if I'm risking $10 per share, I want to make at least $20 per share, 2-to-1 or more. But minimum, you want to take your profits at least at $20 a share. So then what happens? Then we're going to go ahead and push up right here. And so if it's a 2-to-1, then obviously you want, let's say this is 1-to-1. If that thing is accurate, if that scale is accurate, then 2-to-1 will be somewhere around right here, right? That looks about 2-to-1, right? But I like to follow price action, right? So it depends. So if I may take some profits in this area right here, because it's a 2-to-1 trade, right? And there's tools here in TradingView that will show you, well, this is 2-to-1, risk versus reward ratio, right? So you want to take your profits at least 2-to-1 and then have some runners to go. So if I bought, let's say 100 shares of NVIDIA right here, I'll take 50 off right here and I'll let the other 50 go. And then if this candle closes like this, I may take another 25 off over here, may take another 25 off over here. And then I'll have maybe 5% left in my share. So if it dips back, obviously I'm not going to let it go below this. I'll just get out right there. And that's example of a swing trade of where you would profit. Again, if price has been here, right? If you know that price has been here, right? For example, like you're getting in this area, right? You're getting in this break and retest right here. But you know price has been up here, then you expect the price to go back to that area. But if price has never been here, like if you're looking at a chart like this and you see all this emptiness right here, and you don't know where price is going to go, then you have to wait and find out and take your partials. Taking partials basically means if you have a 100 share position, take 50 here, take another 25, take 10, and keep reducing it until your whole position's out. But if you have an area like this and you're trying to do a breakout and retest here, where you already know price has been to a certain area, right? Let's say this area. And you're trying to do a breakout and retest of this, right? Let's say the price breaks out right here. And in this immediate candle, the next week, it actually retests. You see that wick? It retests right there. So let's say your entry is right here in this area, right? So your entry is right there, right? And you say, you know what? I'm going to keep my stop loss kind of tight here. I'm not sure where it's going to go. I'll keep my stop loss right here at this 200-day moving average. Like I said, the golden line is 200-day moving average. So if price does come back over here, like this area, then I'll get out. So let's say I'm risking $8, $5 over here, right? So your risk over here is $5. And then your reward is, yeah, I would love for price to come up here, but my 2-to-1 says that my price should at least go to right here, right? Or right here. I like to go off of support and resistances. Why right here? Because you have an area where price did come up to, right? And stall, right? Like right there, and it went back down. So yeah, there's an area to get. That can be your target, profit target 1, your profit target 2, and then you hold some runners to get this guy right here, right? So obviously I would take some profits in this area, and you can tell where people are taking profits. Like look right here. The people that entered right here are taking profits right here. Any red candle right here, that's selling, right? People are taking profits in this area, but there's not an overload of sellers. There's not an overwhelming amount of sellers where it can send price back down. So people took profits right here, people took profits here, and some people held on. And when here, looks like nobody took profits. They were just waiting for the break to happen. Like they say, okay, if it happens and pulls back, then I'll get out. But people didn't take any profits here at all. It just broke and it just took off. So You can take some of your position off over here. I would most likely take some of my position off over here and then leave the rest to run. So it's a great way to use support and resistances to do that. Let me read some questions here. How do you know what kind of candlestick you should look at? Daily, weekly, monthly, looking into swing trading, 2 weeks to 6 months holds. Once you made a purchase, how often do you look at the stock movement? Once I make a purchase, I look at it daily, unless I'm holding like long term. I mean, I look at the stock market every single day. So when I don't look at it, I feel, like something happened that I don't know about. I'm missing out on something. But how do you know what kind of candlesticks you should look at? So you're talking about candlestick time frames, right, Sharifa? You're talking about what time frames to look at. And like I said, like in my first webinar, that some of us are position traders, long-term traders, who will buy in this area and hold. And if you're a position trader and if you're planning to hold for like a year or 2 years, then yeah, you're going to look at the monthly chart. But if you said you're looking into swing trading 2 weeks to 6 months out, then I would definitely look at the weekly chart, right? But you always have to have a top-down approach. You always have to have an idea of where it's headed. Like I even look at the 3-month chart. This is a 3-month chart of NVIDIA's whole life. This is a 3-month chart, right? Every candle is 3 months long, right? So I start looking at the 3-month chart and I see if it's in a trend. Then I drill down to the monthly chart and say, okay, is the trend holding on the monthly chart? Are we above the moving averages? Yes, the monthly chart right now is above the moving averages. Then I go into my weekly charts. What's going on in the weekly chart? Well, the weekly chart looks like we have a slight correction. We have price closing below the moving averages. So I need to be wary that price is headed down. So I want to get a better price point to get in. So eventually, when you do make your trades, you have to make them on the daily chart. Because daily chart, especially for swing traders, if you're looking to hold 3 weeks, 2 weeks to 6 months, you want to make your trades on the daily chart. You at least want to view the daily chart to see where we're at. And then you basically enter on the daily chart and you watch it and you set price targets. You set alerts to yourself that, hey, look, if the price comes up here to 155, please alert me, please message me. And most of your institutions that you guys trade with should have alerts. So I hope that answers your question. Yeah. Yeah, alhamdulillah. Any other questions before I sign off? No, well, Yakum, inshallah, no problem, Brother Nawaz. Appreciate you attending. Netflix is almost at $1,000 and it's holding this resistance right here. See how the psychological levels hold? It's not going to break it, but if it does break 1,000, it's going to take off. Google's all-time highs. It broke this area. Hopefully it comes back and retests. Amazon is actually retesting right now. Amazon's actually very interesting. I know a few people who are taking Amazon long right now, but it's not financial advice again, but Amazon broke the previous high of 232 right here, consolidated, went up, had this nice move up right here to whatever that price level is, 241, 242. Now it's come back and retesting the same zone. So, and it bounced. It already bounced, but it may come back and retest again. So if it comes back and retests again, it may. If this level holds right here, 232, it's a very low risk to reward strategy. So you can get in. Some people are like, well, what if it drops down here? Well, that's why you have a risk strategy. So you get out right here. So get in, get out, and then you have a nice move up. If that goes up, if not, then you lose very little. I don't know if Netflix is Sharia compliant. You got to check with Brother Muzammil on that. These some of the things I just watch. I don't even have Netflix. I'm not even a subscriber to Netflix, so I don't know. I don't know if it's Sharia compliant. But check on the app and stuff like that, Musafa. They should tell you if it is. Just because I'm watching all of these doesn't mean I'm trading all of these. This is just a watch list. It goes through a lot of different industries. It checks everything. Like, I don't trade this S&P 500, but I watch it because it's important. Yeah. Am I going to post a recording on YouTube? Yes, I will be posting it. No problem. I'll post it on YouTube. Sharifa, yeah, I guess the security aspect of trading is to always have a stop loss order, which is why, yes, stop loss are important. Risk management is very important, especially if you're doing swing trading, day trading, anything that has like short-term profit seeking. You need some place where you get out. You cannot let your ego get in the way and say, well, I'm right, so I don't care how low the price gets, I'll just keep buying, averaging down. Unless you're position trading, unless you're long-term, you're holding NVIDIA or Tesla for the next 10 years, then yeah, buy every single dip, no problem. I understand that. But you're not looking to take profits this year. You're looking to take profits in 2 years, 5 years, 10 years. It's a completely different strategy than if you're actually taking profits on a weekly basis or a monthly basis, which is what I do. So my risk management principles have to be on point. Right. Thank you guys for attending, inshallah. I'll go ahead and end here. And we'll see you guys next Sunday. Next Sunday is, what are we having next Sunday? I just want to give you a quick overview. We're going to be going through indicators, different indicators of how they help you get into trades and stuff like that, what indicators people use. And then after that will be risk management, psychology, and then the trading plan. So, Jazakallah khair for attending. Thank you very much, guys. I hope you guys have a good rest of your day. Assalamu alaikum.